Yo,
Yo,
what is going on, my friend?
what is up? Not much. How are you doing?
I'm doing good. I'm doing good. How are you, sir?
Doing really good. Really good.
Yeah,
Bit
yeah.
tired, but resting and recharging.
Good.
From my
Yeah.
weekend, did you have some fun for your 4th of July, Independence Day, as they call it down there in the US of A?
Um, I just worked a lot. Honestly, you're gonna hate to hear that. I spent some time with my girlfriend, so I chill with her. But nothing too crazy, man. Honestly, I work a lot during the holidays just because of the nature of what I do. But still had some time to relax though, so that's what matters to me. And I get a lot of flexibility with my day to day, so I get like kind of like a vacation every day in that regard. But no, it was good, man. It was good overall. And and I'll say this: it's it's becoming increasingly apparent that with the holidays in America, as pertains to nutrition, the cultural pressures, and just the overall awareness of food, it is becoming increasingly apparent to me that these holidays have gotten exponentially more difficult to navigate for not only my clients but in general. Like I had clients around reverse dieted, and these are, like I said, females 40 to 65. They're eating around 2,400 to 2,800 calories a day during a reverse diet. Typically a lot of them are going into a weight loss phase after July 4th, but man, they're like looking around their families and friends and they're realizing that they're eating 2,800 calories a day. And that's still with decent control on these like July 4th weekends and cookouts and stuff. And their family and their friends are eating well over 3,000 calories, like well over. We're talking almost above 4,000. So it's just crazy how much the game has changed from a cultural perspective since really the lockdowns, man. I think really people have just gotten a bit more stressed, tired, pissed, whatever you want to call it. It's definitely gotten more difficult in general in a lot of ways. The world's gotten a little weirder. So it's just interesting because I see that feedback because I'm always working the holidays and I heard this feedback over the past 8 years. And I've never seen anything like I've seen over the past 2 years, honestly. COVID, a little different because of the lockdowns, right? Everybody
Mm-hmm.
was inside. We weren't
Yeah.
as social. 2021, and then this year, it's just been this just freaking boom, just crazy. Like it's like literally like the world's ending tomorrow. People are just going crazy. So otherwise, it was great though. Otherwise, it was great.
Yeah.
Um, Clients still killed it. It was just more of like an awareness thing, and it's something I'm noticing as a trend. So for America at least.
Oh, I think it's happening in more places than just
Yeah,
America.
I had a feeling too.
Our Independence Day or our like national holiday is very, very close to July 4th. It's July 1st.
Mm.
So that would be Friday, right? And then the Monday.
Uh-huh.
So we also had a long weekend that exact same weekend. Um, it never gets as crazy. Like I've been to a few 4th of Julys that are pretty crazy. Um, I think yeah, in general, the American holidays are like just a more amplified version of the Canadian
Uh-huh.
holidays, like especially the big ones. Like the ones that come to mind are 4th of July and Thanksgiving. Like Thanksgiving does not fuck around in America. It is for real in like a pretty interesting way. Like you show up at I don't think I've ever been to a holiday where you show up at like 10 a.m. and the buffet starts like where there's 20 different dishes brought by all the different odds and ends of the family, and you just eat, fall asleep watching football, wake up, go hit the buffet again. It's I've had some awesome experiences. I was just like when I played on the golf team, I'd get
Yeah.
invited over to my coach's house or one of the players' parents' house who would host like the entire golf team. So it was usually like pretty well done or like pretty well looked after. But yeah, very, very cool. But I can, yeah, imagine it would be so fucking weird to try to navigate if you're going into it with like some sort of weight loss mindset or trying to incorporate it into some sort of day-to-day macro that you're trying to hit or really, really, yeah, a general lifestyle.
Mm-hmm.
Lots of fun. Lots of fun.
Oh
But
yeah, people are having tons of fun for sure. It's just yeah, the catalyst hasn't been hit yet. Let's word it like that. We're not quite there, and that's not a good thing either. I'm not like saying that I want a catalyst to happen, but yeah, I think we're pretty much free and clear of holidays for a while now. So this is actually typically probably one of the most advantageous spots, at least from my perspective in America, for someone to lose weight
mm,
before the holidays hit.
yeah,
And once again, not saying you can't lose weight during that period, but if you got to take a break anyways, metabolically speaking, why not pick the time that makes typically the best sense? And then January, February, March, they're always there waiting for you. They're your old best friend. Everybody is trying to lose weight, and that typically means less pressure, right? Less external factors coming in that affect the process and your decision making. So yeah, it's interesting. It's just crazy to see the shift. It just seems very rapid, like really, really rapid. Like people have just kind of thrown in the towel almost, but yeah, I don't know. It's going to get interesting here in the next few years when it comes to the healthcare and overall health situation.
Yeah. Yeah, just like you're saying, do you want to be on higher calories during vacation or not during vacation? So plan accordingly. What is the next one? August, September, October, maybe like a Memorial Day type of thing? When's that Memorial Day?
What, for you guys?
No, for the States.
No, we already have Memorial Day. That's before July 4th.
Oh,
that's the end of May.
May 29th. Yeah, we have like a Memorial Day. It's called Remembrance Day.
Cool.
In November. It's pretty light. I wouldn't call it like a holiday. It might be a stat, like if you work like a traditional 9 to 5, but
we got Halloween. That's about it.
Yeah,
we celebrate. But honestly, especially because people typically have kids that I'm working with, that's kind of a shit show too, because there's just candy all over the damn place, But yeah, usually November, December are like the danger zone months. That's typically where most companies operate on a Q4 basis there. So people are stressed, they're overworked, they're trying to hit quotas, yada, yada, yada. People are stressed. It's a difficult time. So almost always I have clients reverse dieting through there because I want to save them. I don't want to put them through misery just to try to make a weight loss chart look pretty. And then we set up and then we crush it when it makes sense to crush it. But yeah, based on our title today, we have kind of like a macros and markets V3 going on here with a couple different topics with pre and post workout nutrition, and then also some of the more hot topics going on right now, at least in the crypto Twitter space, or really just the hex space. I feel like now a lot of people talk about Forex and the exchange markets a lot on the crypto Twitter, but the USD and Euro parity that is either there or very, very close to being there has been there all day, and kind of why that's been going on and what that really means. And have we already been kind of notified that this was going to happen way earlier? In fact, on one of our own streams here, kind of told you this stuff was going to continue to happen. So yeah, definitely a lot of stuff to talk about today. Some of it's going to be market-based stuff. I'm not sure if we just lost exercise there, but yeah, I think some of this is really important to talk about because as we continue to see the purchasing power of these various currencies change, it's really educating people to what they need to do to prepare. Because just because Americans at the moment may be lucky because the US dollar is supposedly gaining value, and really it's just gaining value to other currencies, right? Not as it pertains to it buying food or other commodities. Keep that in mind. It's still losing purchasing power there. It's just compared to other currencies. Just because the dollar is holding this magical value, this perceived value, that's all it is, compared to other currencies, doesn't mean that's always going to be the case. And that's something very important that people need to realize, because this may be kind of one of the last chances where it has that status, aka the world reserve currency, in some capacity, and also its trust. That's all these currencies are trust. So I think it'd be really cool to get into USD/Euro parity, look at some charts, and then also go over some pre-post workout nutrition stuff. I'm sure people have some questions on that too.
Yeah, a little bit from the markets and a little bit from the macros.
What do you think would be good to start with?
What the heck should we pull up first?
Alexander's comment. That's funny.
Yeah.
You will deflate. We're gonna have deflation.
Yeah, one day there'll be deflation. It's just gonna take a fucking while to get to.
The body fat deflation.
Yeah.
I'm gonna show.
That's a little easier to control.
We can start with either, man. I don't mind.
Yeah, let's start with market stuff.
Okay.
I'll just run through some of the, well, I guess mine's an eclectic mix of stuff. Kind of market based, kind of.
Yeah. Let's see it.
Kind of both. Let's check it up here. Well, first one I got to hit him with is the Hex Daily Stats. Hey, if you are not, well, I don't know, it's not great to just be staring at prices, but this is something that's always up here in the top left for me as one of my little tickers. It's always got the ticker and it's got a whole bunch of sick data in addition to the ETH gas price. We've had some really, really low gas as of late. So if you're doing
Yeah,
stuff on the ETH
loving that,
blockchain,
man.
it's been really, really nice to start and end stakes. I think I just ended a stake that was from day we're day what, 952. So I think the stake I just ended was maybe like 500-ish days old, and it was okay in terms of price. But man, the longer stakes, like even at low gas prices, are getting killed by that S disk call that calls every single day for that it was alive as a stake. I think it was like $30 with today's ETH prices for me to end a 500-day stake.
Wow.
So that, right? So $30, 500. So most people, or a lot of people, are doing 5.5. I think this one was around 500 days. Oops. So at today's ETH prices, it would have been approximately, I don't know if it actually scales linearly with time. I think it does, right?
I'm not actually exactly sure, to be honest. I have a bunch of stakes that have not ended yet, so I'm about to
Times
find out.
$30. So if you have like with today's ETH price and like today's gas cost of like 12 Gwei, I think it's going to cost you about $300, $350 to end a stake that's Quattro Cinco, 5.5 or 5.5. Well, so therein lies like one of the the biggest reason for Pulse Chain coming down the pipe is that with ETH prices going up and like gas will not stay here once prices start going back up, this will become, yeah, very, very large. So that's gas. What else? Richard's been fairly active as of late. So up here
I had a
is
stream today.
yeah, he streamed with Miss Teen Crypto, I believe her name was. I don't know, I was tuned in and out of it for a bit. The other thing that I really enjoyed, he did a Spaces, like a Twitter Spaces the other day with I'm not sure who, but then afterwards he talked to, I think he's called Hex Tangent or Ultimate Tangent with
I saw comments about this. What the heck happened with
maybe capital TA. And I think like so far I'm an hour through an hour and 23 of it. And it's basically Hex Tangent arguing for like pro Bitcoin and then Richard arguing against. So you hit a lot of like similar topics and similar arguments that you've heard if you've listened to Richard at all up until now. And I honestly think like so far they're pretty, I don't know, pretty normal about it, like just talking, just like talking each other's side or each other's point. Like Richard's fairly vulgar as he usually is, but like it seems like in good spirits for the most part. I haven't quite finished it, but he was in a big space right before this one. Somebody with like 800K Twitter followers, I think. I just can't remember who the heck it was. And then it led to this. So I've been really enjoying this. It's really just him going through most of like the Bitcoin talking points against like a local hexagon or current hexagon. So now the next thing I have is like a little bit more pertaining to broad markets. The big one that's coming out this week is some inflation data.
Oh, is it CPI?
Yeah.
Oh,
Core
July
CPI
13th,
on Wednesday. So we've
This
got
is big.
CPI, Consumer Price Index monthly, core CPI monthly, and then year over year.
Yeah. This is going to be important. What was last month? I think 8.3% or 8.6%. Something like that. I can't remember exactly what it was. I think it was right around there. But yeah, I think the important thing to know here is, well, I'll wait till exercise comes back. I think I lost them there for a second. But, when it comes to core CPI or just CPI in general, I think what's most important for us to talk about is not only the numbers. Yes, they're high. Everybody knows that now. It's obvious. People are all paying attention to it. But what is the Federal Reserve actually looking for, and what has their talk so far been really conveying to us? and what are they looking for conviction wise before they potentially pivot and change and do that about face everybody keeps talking about, right? But exercise, you're back now. I thought I lost you for a second there.
Yeah, that's the second time. I don't know what's going on with my connection. That I've been dropped briefly.
CPI.
Yeah, so you are right. The previous
was it 8.6?
data point was 8.6, and currently the median forecast is above that at 8.8.
Yeah.
Oh, sheesh. Again.
Yeah. So here's a key thing to recognize. They wanted inflation not go really above 3 to 5%, and they thought it was going to be transitory. We saw that narrative stay the course for a while, and then they totally undershot it, right? It got totally way too hot, way out of control. And so historically, they're going to typically way overshoot this. So people are thinking they're going to way overshoot this, and they're just going to kill inflation. They're going to absolutely kill it. So they're just going to totally. I think I wouldn't even be surprised to see a full 1 percentage point raise next month, because it did a 75 basis point last month, and they are committed. They are not going to stop. They do not care about the markets. They don't care about people's retirements. They don't care about any of that right now.
Yeah.
And like we said a few streams ago, nobody's talking about this. Only a few people are. Remember I said a few streams ago, the narrative is inflation. Yes, they don't want inflation. The narrative is inflation. What they really want is to bring back strength to the US dollar. And we'll talk about that in a bit. Remember we talked about that? They want strength in US dollar. Nobody's talking about this. It's like, oh my God, the dollar is just getting so strong. Oh my God, like what is this magical phenomenon? There's the euro parity. Like, oh my gosh, like what's happening? What is so different about this? As well, this has happened almost every time they've hiked rates. It's just, we're in a very different spot geopolitically now. So we could look at the DXY chart later, but the point is I think not a year over year, but a month to month, they're looking for inflation to not only peak, but start to come back down. Whether that starts at 2%, 2.5%, whatever, is another story. But the Federal Reserve is certainly convicted about this, and they're going to continue to do this and shove it in the market's face, in the bond market's face. Because even the bond market right now is pricing in. Basically, the bond market is pricing in that the Federal Reserve can't raise rates past maybe 2%. They're saying, hey, yeah, you know what? I know you forecasted you want to go above 2%, but we don't think we can do it. So we're gonna price this in at this interest rate on the 5-year Treasury or whatever the yield that you're looking at, right?
Yeah, that's pretty crazy.
So the Reserve is going to have to come in and be like, no, F off. Like, we're going to raise even higher than you think now and spook you and show you that we're actually going to do this. So that's what I think is going to be happening here, especially if CPI comes in and it's higher again. If it's still getting hotter, even after a 75 basis point hike, dude.
Yeah.
The markets there's 100 million% more pain coming before things can get better. And anybody who is smoking anything will be saying otherwise. Other than that, there's a lot of tightening going on. It hasn't really fully started yet, and look what the markets have done. The Federal Reserve hasn't even really started offloading their balance sheet yet. They've just really started raising interest rates.
Yeah,
like we can look at their balance sheet and see that they really haven't been selling that much.
Yeah.
So the sell pressure isn't even there yet, and people are freaking the hell out. So there's a lot of things to get into this, but it will be very interesting to see where CPI sits
on Wednesday.
And see if it comes down. If it comes down, then I think the markets and everything will be different. I think it'll be a little bit different. I wouldn't be surprised if it's still raised, but I just don't. Like I said, I think August, and I think my prediction is still for August, right, where the last rate hike is going to be, because there will. I know what the Fed is saying is that they're just going to do it and they don't care about what's going to happen. But I think eventually there's going to be so much pressure because so much is breaking, because there's so much leverage that they're going to have to. And people forget when Paul Volcker raised interest rates, the amount of median debt in the system was way lower, right? So, for example, if you raise a % interest rate, right, on 1 trillion of debt, that's a smaller move than raising a % interest rate on 10 trillion of debt, right? So the average move is almost just as fast as what Paul Volcker was doing when you look at the numbers, because there's so much more debt in the financial system. Right. So now when Jerome Powell is raising rates, he is moving almost just as fast, and it's having a very real effect on the economy, whether it be businesses not able to operate now because getting capital is much higher cost, layoffs, you see these immediate effects happening. And the point is I think there will be too much to break in the system here, So once again, that's just a prediction I have. I think they want to do this. I think they're going to do it. I think at some point they're going to have to just stop, and then they're going to change. It's a really interesting dynamic here. What's going on with inflation, and they do typically overshoot. So that's why I do think there's a lot more pain to come. That's where we could see that Richard Hart call, and that they're 50-60% down from here.
Mhm.
You know, it means that probably another 20 to 30% leg down from the stock market. I mean, that's devastating to people.
Yeah.
If you're trying to retire in the next 2 years, you're not.
Nope. Yeah. If
you're not retired in the next 2 years, you're losing 40 to 50% of your portfolio.
Yeah. Yeah. If your margins were like, yeah, not even that thin, like for retirement, like if you had a pretty decent cushion, like you're probably not retiring now.
Unless you're like so weighted heavily in cash, which
Mhm.
nobody is. You know what I mean? It's just so difficult to even do that when it comes to the 401k management. You know what I mean? Because they don't like it. They don't want your money in gold. They don't want your money in cash because 401ks suck. But the point is yeah, CPI is going to be a big deal. So pay attention to this, and depending on what direction it goes and how much in the direction it goes, that will really set the stage for how aggressive they get. Because if it's still going higher, it means at least another 1 to 2 rate hikes. They need to see it reach a flat number or a decline, and then they also want it around that 3 to 5% range before I think they're going to let off the gas here. Now, whether or not the system can handle it or not is another thing entirely, and that's what we're seeing going on right now. With everybody is kind of freaking out. We've never been in a situation where we've had to raise rates and we've had rampant inflation going on. There's only been one other time really, and that was either the dot-com bubble. No, it was really the 80s. It was really the 80s we had that happen. And you know, Cookies and Crypto makes a good point here. I actually do think that there's going to be a decorrelation with HEX going on. I really do. And we're already kind of seeing it in the chart. The sell pressure going on, like there's the system is working. The system is working. The mechanics and game theory of HEX are working, where I do think that there will be kind of a trap door down before we start going higher. But the way HEX decorrelates is going to be crazy. So it's just like with 2020, HEX kind of came out of the bear market and surprised people. I think it's also going to come out of this bear market and surprise people, be one of the first things to kick it off. Some people are wording it as, oh, it's going to create the next bull cycle. I'm not so sure about that. But it's certainly going to have a lot of catalysts, because I don't think the next bull cycle is going to be started. I just think these other shitty assets are going to stay down low, and they're not going to come back because they're not good assets like altcoins and stuff, you know? So I think I think that is something that could happen, but a lot has to go down before it. And Richard knows this. He knows this. I know he wants to launch, but he also knows this stuff going on. So, you know, how much of his verbiage is true or not, I'm not quite sure, but I know he wants it to be working, and he's got no interest either to launch it, even if it was ready, if this is all broken, if the markets are all broken. But we'll see. I mean, I think I'd be as excited as anybody if you launch it tomorrow, for sure. But yeah, CPI, that's going to be interesting, man.
Yeah, and does the FOMC meeting happen this month as well, or is the next one next month? Do you know?
Last month was a weird one. They had like extra meetings, I thought, last month because of all the shit going on. I'm not exactly sure. I don't have it all like mapped out when they're going to meet and stuff. I just try to follow clips and stuff from people I follow that pull them all up. But you know, I watched the last one that Powell had, and you know, it was basically, hey, we're committed to getting this down. We don't care about anything else. And essentially what he's saying is we care about the US dollar gaining strength, and with it will come inflation coming down. That's all he's really saying. Because think of it, what's going on in the background, guys. You have a geopolitical power struggle going on. You have a battling of the reserve currency status, and you have superpowers kind of shifting what's going on, right? You got Russia, you got China, all this shit going on. And the battle for the world's next reserve currency is underway, especially with decorrelated or decentralized finance and crypto being in the mix too. So the last hurrah to hold on to any sort of strength here is now. This is the perfect opportunity to get all the strength that we can back in the US dollar, because everybody's afraid. Everybody's afraid. Nobody wants to be holding bonds of these other countries. The euro is a complete travesty right now. It's a basket case. Yeah. The euro is a basket case of a bunch of different countries, and it's a mess. The European Central Bank can't handle any of this right now. They're having emergency meetings. The European Central Bank is holding emergency meetings for good reasons, guys. You know, and the euro parity is just kind of like a default. What we've been talking about here with the USD gaining strength with everything going on. It's not like a surprise, is what I'm trying to say.
Yeah, that's crazy. that
It's showing 1.00.
that it's straight up one for one. And yeah, the last time you were saying 10 years ago, it to me looks like it doesn't touch parity until like 20 years ago.
I thought it was
This is just a shitty Google chart though. So
yeah, I'm pulling it up now. See,
yeah, bring that up. The one other thing I was going to point to
1.00. Yeah.
was the GDP data is going to be at the end of the month too, because we are officially through Q2 as of what, 11 days ago?
No, you're right. It was 20 years ago. Yep.
Was it 20?
Mm-hmm.
So we're officially through 2 quarters.
Guess when that was? The dot-com bubble crash.
Come on. Yeah.
Mm-hmm.
Yeah.
Funny, it's like all these crazy events happened when there was a crazy surge in the US dollar strength.
Yeah.
And financial policy mishaps. I wonder what we're in store for here soon, guys.
Yeah.
There's a lot of opportunity, but I hope people are preparing because we're getting closer.
Yep. To some sort of large or more significant event. The GDP was the last thing that I had pulled up here, Ryan, is that we can expect some GDP data for
yeah, they posted about that recently. The Atlanta
coming July 28th.
Mm-hmm.
And I think it's probably safe to say we are in a recession. That's been like one of like the hot terms lately, is like, are we in a recession? Will we look back and see that we were in a recession? I think it's probably likely. So that'll also be coming end of this month.
Well, dude, they just had if you pull up GDP now, Federal Reserve Bank of Atlanta, they posted this I think like a week and a half or 2 weeks ago. They revised their estimates to be down again.
Yeah, I've got the what's this forecast?
Yeah, there you go.
Forecast minus 1.5.
Mm-hmm. So they're already forecasting now a recession.
Yeah.
And once again, like we talked about, the most stupid thing ever. It's like, as an economist, like, oh, okay, great, 2 negative numbers, awesome. Or we have been in a recession. It's like, who are we helping here?
Yeah.
It's been 2 quarters of pain and suffering. You know, we need insights to this beforehand. And honestly, a lot of Hexagons that stream, like Whales Only and some other ones, we're talking about this. Like, hey, pay attention. We're here, guys. You don't need some fancy economist to tell you this, that this is happening, to point at 2 negative quarters of GDP to tell you that this has been going on. So yeah, we are absolutely there. How deep and how long is another thing entirely.
Yeah.
So that was kind of funny to see. Man, this monthly candle is brutal on the euro US dollar, dude. The euro has lost in the past year, not even 20% of its purchasing power to the US dollar.
Yeah, yikes. I'll pull up yours here. Let me just read out some of these numbers for you. So when COVID was hitting back in March of 2020, then we went into negative 4.8 GDP, -5, -5, -33, -32, -31. And since that, it has been an absolute rocket. Up 33, up 33, up 33, up 4, up 4, up 6. And now recently, yeah, minus 1.4, minus 1.5. Honestly, when I look at it like this isn't as scary to me as the other shit. Lots of people are like using this just as a talking point, I think, like, oh, is our economy in a recession? And I think it's a good metric to use, but this isn't the scary thing. This is like the symptom.
Yeah. It's a trailing indicator.
Yeah.
Right? It's a trailing indicator. So it's not really the reality. It's not the day-to-day. It's not a leading indicator. So it can definitely be annoying to people in that regard there, because, you know, it's it doesn't help the everyday person. It really doesn't. I know we talked about oil last time too. You touched on that briefly too.
Yeah, definitely.
I think we saw our first case of short-term demand destruction here. So I'm going to go into the weekly chart here.
Yeah.
Notice we are still very much so an upward trend, right? It is a nice relief right now, but there's still a lot going on geopolitically speaking when it comes to gas reserves. Like you see this stuff with Gazprom and them needing parts from Canada. You guys have actually been in the news recently with there was like some turbine thing that Gazprom needs that Canada has, and Ukraine is like, no, don't give it to Russia because they're going to use it as a bargaining tool. I'm not getting into all that, right? It's not like about like military politics or any of that shit. But the point is there is still a lot that could happen with oil, and this is still taking a breather. Like notice we haven't even touched the previous all-time high here, right, of 85. Like we were just at 85 in November.
Yeah.
So this is still not very much so not broken its trend, although it has been taking a breather. It's been nothing but up for almost freaking 40 weeks straight. So the point is oil is something to keep an eye on. Doesn't hurt to fill up your tanks right now because you're getting some reprieve, but the oil is definitely something to keep an eye on as it pertains to geopolitical stuff because supply is still very much so screwed right now. There's a lot of countries that like Sri Lanka and some others that don't even have access to any more oil. They're bankrupt. They have nothing. So things are really, really crazy right now when it comes to commodities. So keep an eye on oil.
We think this is going up still, hey?
100%.
Yeah.
Mm-hmm. Unless there is so much demand destruction from the rising interest rates. That's the only thing that can happen, right?
Yeah.
You don't care for high prices as high prices, right? Same thing with inflation. So demand destruction is the only thing that can happen. But notice this wasn't demand destruction. People were actually traveling quite a bit the past couple months. Flights are all booked. People are driving everywhere. So there wasn't like real demand destruction here yet. People are feeling the pain, but I don't think this is real demand destruction. Demand destruction is like this. Let me show you. This is demand destruction. See this here? This is demand destruction. This is back in 08.
Yeah.
This is demand destruction. This is straight down out of the parabola. This is taking a breather. See the difference?
Yeah.
That is way different. Now, if this falls out and comes, something like this, something like that, then you could say yes. And we'll probably have an indicator from the rising interest rates of the markets telling us what's going on about to happen. Now, let's talk about the US dollar. Real quick.
Yeah, geez.
As historical reference here, right? We have this kind of macro top that is put in quite a bit here, right? We've touched this so many times, and we've only really broken above it 2 times in terms of the relative strength or value in comparison, remember, to other currencies, right? You have this period here, which is the inflation in the 80s that we saw Volcker raising interest rates, right? To cure inflation. And you see how high it went, all the way to 163. Oh my God, it's crazy. And then you have it again here in 2000 with a dot-com bubble. You have a minor bump down here, but this is what was unique about the financial crisis in 08 was that we didn't have crazy inflation. We didn't have any issues with inflation in 08. So dot-com bubble crash, we see it rip up here to 120. So there is a bit of a gap to fill, right? From a trading perspective, from people who trade Forex, there's a bit of a gap to fill here, right? So we've already gotten to some of it. We're getting close to this maybe macro 110 top here, but from there, you got another 7 to 8% to go. So what does this mean? Well, if you look at the monthly, we have been seeing right around here, right? Sell in May and walk away. Remember that? We've been seeing this uptrend the entire time. This has not been new. As soon as the free money stopped and we started seeing the Federal Reserve talking about rising interest rates, remember they're talking about it. We talked about that. They're just talking about it because they want to try to direct financial policy in the markets by what they're saying. Hey, we're going to raise rates. Get scared, sell off, whatever, right? Bring people back into the dollar. And then you see this, and then you see another, Bitcoin rally coming through here. You can see where the crypto kind of interacts with this stuff. But the point is this is not a surprise. So the euro losing value as quickly as it has should also not be a surprise because the euro is comprised of 10 other countries. The euro as a currency, right? So it's a basket of other countries. That's why I say it's a basket case, because there's many countries that have issues in that basket, and the European Central Bank is having issues restoring any sort of value to it. And the point is with this going higher and higher, there are real severe implications to other countries when this happens because they hold debt, right? Other countries hold American bonds, they hold debt, and they have to pay that debt. So that debt gets more expensive to pay as their own currency loses value. So this is really bad. People are like, oh, this is good. This is good. No, it's not. This is really bad to see these insane increases. This is what, 20% increase in the past year and a half. this really screws with financial systems a year and a month. This really screws with financial systems because it really impacts the amount of debt that people have to pay and how they pay it. Just like an interest rate that we get on a car loan or a house, right?
Mm-hmm.
No different. You take a $500K mortgage at 3%, you bump it to 8%. Now you're paying an extra $600 on the mortgage. Where's that money coming from?
Yep.
Like it was let's say it was $1,000 mortgage, now it's $1,600 mortgage. Is that doable? I don't know, maybe to a select few, but you can see where that can cause issues. But this is like countries we're talking about not being able to pay debt. Yeah. So this looks like it's going to go higher. How much higher? I don't know, but I can assure you that it's probably going to go higher as long as the Federal Reserve keeps raising interest rates. And if the CPI number comes in hot and or equal or higher, they are going to continue to raise, which means more people are going to continue to leave assets and commodities and go back into the US dollar because it's still, for the time being, the safest turd in the turd bowl, the punch bowl, whatever you want to call it. Mm-hmm. So what does that mean long term? In my opinion, I think it's your last opportunity to buy these amazing assets, something like Hex, at the prices you're going to get it. I don't think you're ever going to see a 95% correction ever again in Hex, personally, because this kind of correction in the US dollar is not going to happen again. I do not think the dollar is going to have the US reserve currency status. It's going to be a mixture of a bunch of assets in the next economic cycle that we're about to have happen. And people thinking that this is going to stay up here forever like this are crazy, because look at what it has done.
Yeah.
Here you go. This is all the way from 1980.
Yeah.
Look at the difference here, right? From the top to the bottom is a 60% difference in purchasing power. And that's a huge deal, right?
Yeah.
That's a huge deal. And that's not even taking into account inflation. But the point is like, think about how that's going to impact when money is leaving the US dollar. Where is it going to go? Markets.
Yep.
Wherever it's treated best, right? Wherever it's treated best.
Yeah.
So it's not like, it should be alarming, but it shouldn't be surprising that the euro is losing value as fast as it is. There are severe issues in Europe right now. Severe. People in Europe, I'm really feeling for right now because they're going to have some serious trouble pretty soon, especially as it gets in closer to wintertime. I think for obvious reasons with the energy crisis going on over there. Mm-hmm. And they're dealing with inflation too. So it's definitely time to be wary and be prepared. But yeah, definitely some crazy times, man, seeing this stuff come in like this. And I do have the Euro USD chart up here too. Look at this monthly candle. This is just.
Oof. Did you follow that? What's the fuck's his name? Boris, like the reason for his departure or his resignation?
Dude, I saw all I remember seeing him is how he basically all of the political leadership totally didn't follow any of the COVID guidelines, which I think was probably the case in every country, which is highly embarrassing, and just did all sorts of sketchy shit. It's like, dude, how is this even reality right now? You know what I mean? Like, it's just embarrassing.
Yeah.
And like, not to mention, not just him, but like that entire group resigned. It wasn't even just him.
It was like 60 resignations or something, right?
It was a lot, dude. It was
a lot.
Dude, look at this. Look at the gap this has to fill. Do you see this now? It doesn't. The key to remember here is there probably wasn't a whole lot of volume down here, right? This didn't spend a whole lot of time here. So this is a big gap to fill, right? We're right there now, and it may consolidate a little bit, right? It may consolidate here, burp, boom. That's what? Another 10 to 12% purchasing power gone. Yeah, that's huge, man. That's a ton of money to move these Forex markets. That's a ton of money. That's a ton of money that has to move these things. Because you saw in the DXY here, look at what this move did to something like Bitcoin, right? A 20% move here over the past year took out, 60 to 70% of Bitcoin?
Oh, yeah.
Think about the difference there, right? It's not like 20% goes in the US dollar, 20% comes out of Bitcoin or the crypto markets, right? It's like, no, trillions of market value are gone, and it took out a large portion of it. So another 10% move, wouldn't be surprising to be the final nail in the coffin here. So I wouldn't be surprised for this to test those old all-time highs here around 118 to 120. And once again, that is where some of these systems really begin to break. And the question becomes, does Jerome Powell and the Federal Reserve have it in them to force the pain that we have put off since 2000 and 08 now? Or do we say, hey, let's roll out this little thing we have called the Fed Now, which we talked about 2 weeks ago.
Yeah, we did.
3 weeks ago. Fed now, you remember that? Do we roll this out now because this is the right opportunity? People are suffering. They can't pay bills. And they need this. Hey, take this central bank digital currency service, this Fed coin. It'll give you this and this. It'll be able to directly inject money into your bank account, all this stuff, right? So, whether that happens or not on that time frame, who knows? But there's two things that lie ahead. Are they going to force us to feel the pain that we need to feel now? Or are they going to push it off, incorporate some of these systems now versus later? I don't know.
Yeah.
I don't know.
And the Fed meeting is July 26th, 27.
I'm sure they'll be, it gives them a couple weeks to look at all the CPI numbers and the PPI numbers and then have that meeting and talk about it.
Yeah.
I wouldn't be surprised to see another, probably the last thing I'll pull up here. Remember this old chart here.
Yeah.
Once again, we want to keep going back to these things to remember in the grand scheme, it's nice to talk about things, but there's two things going on. People are forgetting this. People who are like, no, they're going to keep raising rates. They don't care. It's like, you understand, they are raising rates to the equivalent of what we did in the 80s. See, the 80s, they were the raise all the way up here. But people forget they started at 5.5%, 6% here in the 80s. And then they went up to like 10. And then down here, they went from 9 to 12. I got to zoom out a little bit more.
Yeah.
Here we go. So they went from effectively 5% to close to 18%, right around there. But there's way less debt in the system. So I hate to say it, guys, but there's so much debt in the system that is basically the equivalent move of us going from here to 2%. Like, see this little blip? We've been at effectively 0% for 2 years. We've been giving away free money for 2 years.
Yeah.
So we've been pumping out this free money for 2 years. And you see the GDP growth that came from it. And we can't create GDP growth because you see the recession coming, right? What does that tell you? We have negative GDP at 1.2% interest rates.
Yeah.
We can't even create positive GDP growth at 1.2% interest rates. And they want to go up here. If they do a full percent point, that puts it at 2.2. That's dang near close to where they were here, where they had everything crashed. The overnight repo market crashed. The bank lending crashed. People don't know about that happened right before COVID. See how this was right where it was like July. Yeah, right around July. And then COVID happened obviously in February. So not too far after, where they had to just go, oh, screw this, right down to zero. They're like, oh, we'll bring them down slowly to help fit. No, right down to zero. So the point is, there's so much more leverage in the system. Every half a point rate hike is a big deal, even 0.25%. But once again, the question is can they do this in this tiered way here and bring it all the way up without things really breaking? I don't know. This is the power that the Federal Reserve has as a private entity. They're not a government. They're not part of the government. Not part of the U.S. government. So.
Yeah, and these raises are like relatively similar, right? Like if you go from 4% to 18%, it's like a relative increase of like 4x, which is kind of what you're saying is what we're doing now. So the relative change, our relative increase in rates is similar, and they're going to get absolutely throttled right away, where they will not be able to go any further. Yep.
Businesses that were viable at 0% interest rates are no longer viable. That's where the layoffs are going to come. That's where, just the economy shutting down in a way that's a bit more, what we're used to here. Not like with the shutdowns with when COVID happened, but so we're kind of seeing the effects. The real big question that nobody's going to have the $1 million answer to, which I think for now is the safest thing, is as soon as we see, because remember the markets are forward looking. So as soon as they get noticed, like the bond market is still being ballsy. It's still saying, hey, no, you can't even do what you think you're going to do. So I think they're going to get slapped silly personally. But if the Fed sees that inflation, instead of 8.6%, it hits 7.8, or it hits 8.3, and it's like, oh, it's still high, but it stopped going higher. Okay, we're going to think about this. And that's kind of the indicator, like, hey, in the future, they're not going to raise rates anymore. They're probably going to do very small ones or even go down to zero and keep it flat. We're going to put money back into the markets. It's now safe to do so. It's a safer environment. I don't think that's going to happen. I think August, I don't even think they're going to want to do it in August, but they're going to have to because everything's breaking. I don't think we get past in August. I think they do the last rate hike in August. I called this a few months ago. Last rate hike in August. And then September, October, November is where they go, oh, we can't do it anymore because there won't be a market pretty soon. Can't have that much pain. So yeah, we're going to stop raising rates. We're going to keep it flat here. And then boom, that's where things start to take off. That's where things start to take off.
Mm-hmm.
And it gives them firepower. Remember, what does the US dollar need? They need firepower. So when they start money printing again, this can come back down to acceptable ranges.
So they've got some space. Yeah.
Mm-hmm. I mean, it's just been trading in a range, and you really look at it, right? That's the real range. A couple of weird economic events have happened, but when you really zoom out here and you see this upward trend right now because of the current status quo, what's going on? I mean, think about this. This upward trend starts right in the beginning of 2021.
Yeah.
Which was right where the bear market started, even though nobody realized it. That's kind of where Richard Hart called the top, right around there. So once again, could we break out into this area up top where there's kind of some weirdness going on, where we've seen it a couple times? Yeah, of course. And that's not good, though, because it's going to cause a lot of pain and suffering for other countries, too.
Mm-hmm.
So, yeah,
we're still moving towards some sort of precipice.
Yeah, people will know. People will know when we get there. Yeah. We're not quite there yet. Yeah. We're not quite there yet. We have not even smelled max pain yet, in my opinion. Now, how much of that affects Hex? I don't know, honestly. I think Hex is unique and different. With Hex may have already seen max pain. Honestly, like there's just so much seller exhaustion right now. It's hilarious. Mm-hmm. Like they can't even, like the price is going down right now a little bit of Hex, but it's like just the amount of sellers are just like they're just not there. And the on-chain stuff shows that the stakes ending continue to get less and less. So it will decorrelate regardless because of the staking mechanisms. And the new people entering the system are more convicted. That's obviously my opinion on it. But
no, man, some exciting times actually, like at these like Pico bottoms or local bottoms.
Mm-hmm. I mean, yeah, look at this trend, dude. It's crazy. So you got to ask yourself, right? I know it's like people are a little bit skeptical of this stuff sometimes with the whole central bank digital currency and stuff. It's like, guys, they already have it ready. It's done. You got to understand that they're going to be clever about the way they want to implement something like that. Because you got to understand there's so much debt in the system. They know it can't continue to operate like this. Because eventually rates are going to have to go not to zero, but guess where?
Yep.
Negative.
Back down.
We have to go negative. Then we have negative interest rates, right? This system can't operate like this. So basically what I think, like I said, I talked about this before, and I think you're going to be hearing about it. And we'll talk about this in another few months, just like we have it with all this stuff. Bank bail-ins are going to be a very popular term. It won't be worded like that. Mark my words, it won't be worded as a bank bail-in because that'd be too obvious. But when they switch over to central bank digital currency, do not be surprised to help kind of reset the debt system that they have the new central bank digital currency. And then for some reason, even though you may have 100 grand in your bank, you got 100 grand now with the Fed Now service, but for some reason, the purchasing power of that 100 grand is a lot lower. Huh. Mm-hmm. The number is the same. It should be the same. The purchasing power just randomly got a lot lower. It's basically theft. Look in bank balance. Look them up if you guys have not yet. Please, please, please look into what a bank balance is. That's why it's so important to get some of your money off the system, like in crypto on a cold storage wallet, because that can happen. It's not being controlled by a central entity that's just going to be like, oh, by the way, F the old system. It's too messed up because of our own fault. We're going to come in and destroy some of your purchasing power with it, but it'll just be a different name and it's the same amount of dollars. Have fun.
Yeah.
Plenty of other countries have already done that, printed their currency into oblivion. That's why inflation is so bad here, because look at Venezuela, you look at Argentina, you look at these other countries with these crazy inflation rates that they cannot get under control. And people are rushing out to buy goods before the merchants raise the prices. So literally like a that day thing. Oh shit, they're going to, the inflation's getting crazy again today. We got to run out and buy bread because it's going to be 10x the cost tomorrow. Mm-hmm. And people think that can't happen here in the United States. That's why they are taking inflation very seriously, because they don't want that to happen here. That would be anarchy for sure.
Yeah.
So.
Oh yeah. Yeah, and it is possible. It's not like that many moves out of the realm of possibility.
Yeah. Mm-hmm. Things are pretty wonky right now, man. The system's pretty effed. It's pretty effed right now. There's just That's why I'm really like researching more about the bond market, because the bond market really is a tell, because every other financial kind of asset kind of gets derived from the bond market in a way. And it's kind of really interesting stuff. But yeah, pay close attention, guys, because this is kind of like your North Star. It really is your North Star, right? What the Fed is doing with their balance sheet, what they're doing with interest rates. You kind of want to swim with the current, man. You know?
Yep.
You kind of want to swim with the current. So, like I said, this stuff, the euro, US dollar parity, the US dollar getting strength, like we've been talking about, that's strength to everything. It's not just the euro. Everything's tanking to the US dollar right now. It's just this is the one that's in the news right now. That's all. I mean, remember we looked at the JPY? Oh my God. Remember the JPY?
Oh, yeah. Yep.
Like,
whoa.
Look at this. Look at this. Guys, this is not just like a euro thing. Everybody is in trouble.
Yeah.
Right? And like we go to the weekly, look at this. Actually, I want to do look better this way. Or more dumb, I should say.
Holy shit, yeah.
Look at this parabolic rise and look where it started, right? January of 2021. Does that ring a bell, anybody? January 2021, right here. There's the uptrend. Freaking 34%.
Yikes.
In a year and a half.
Yeah, wow.
And Japan's a whole other situation, but this is not like what I'm saying is this is not unique to the euro. This is unique to the perceived value of the US dollar as a currency by the world, which is changing quick. People don't realize that. People in America are very complacent, think, oh, it's just going to always be this way. Look at the history of superpowers. Look at the history of superpowers as it pertains to the reserve currency status, and look at how they have fallen. And look at the order of operations and how the empire fell, and then how the actual currency status fell, and how long that took, and how it went about happening. You'll see a lot of similarities. And like I said, Jerome Powell himself literally came on one of their meetings, I think it was a couple months ago now, where he said, I definitely see a day where it won't be surprising to have a few different currencies as a world reserve currency status and not just the US dollar. He said it. The chairman of the Federal Reserve said this. That's the shot across the bow. Hey, smart people paying attention, this is coming. Get ready. I'm not going to outwardly say it, but I'm going to say it like this. Get ready. It's coming. So, you know, that's if there's any alpha, that's what it is, right? Understanding that your last chance to have some serious purchasing power over some of these assets. It's now. I mean, look at what Richard Hart said. He said, I'd have no problem telling my friends to buy Hex right here. Guys, what other signal do you need? Hex is down like 95%. That should already be a signal. But this is the highest the dollar has ever been since 20
your cash is up.
22 years. Yeah, this is the purchasing power of an asset. You're getting more of it for the same amount of dollars. Don't let the price going down scare you right now. When you look at, I mean, just the overall chart is straight up to the right when you zoom out, but you see a lot of, that's where we're getting rid of a lot of the junk in the system. That's why I know Richard Hart loves this time period, because he likes to get rid of all the lack of purity.
Yeah.
In terms of people that are buying Hex and selling it.
Shake them out, create a nice floor, and freaking pump.
Yep. And just he has better mechanics, better pump of metals. The game theory, the psychology is better to the product. So that's why it's going to pump, just like Bitcoin will go again, but better.
And like with all of this like contagion bullshit that's going on, like that, like how important it's been illustrated that you controlling your keys is a fucking real threat. Like, there's some like pretty interesting moving parts that will or could shine like a massive light on like the Hex design and setup. It's like, yo, this is yield that you are minting with your keys. You don't have to go chasing any other bullshit. Yeah, it's a pretty cool little storm of events that's just highlighting this this product that is working, has worked, will continue to work while you hold your keys.
You know what's crazy? What people are saying now too is they're saying, oh, Hex is going to fail, just like Celsius, just like BlockFi, just like all these things. So now, after Richard and the Hex community have told you these things, and they did fail because of these things that Hex does not have, they're just still blanketly put. So we're still so early.
Yeah, it's just fun. Like all of the like the talking heads in crypto are
Mhm.
like now just
Mhm.
like pushing or plugging hex without really knowing it. They're
Dude,
talking about
it's
like
bad, man.
about holding your keys, about how if you don't know where the yield is coming from, yada yada. Yeah, well, what the fuck have you guys been doing for the last 2 years? Shilling this shit, FYI. And now, oh yeah, it turns out there are um, risks that can come to the forefront and create fucking holes in people's fucking uh, books and blow up like I don't know, like $100 billion went to zero.
Yeah, it's pretty bad.
Just blown up. Yeah, and now you get them still talking shit about Hex while also saying things that support it and like absolutely plug its fundamentals and its tenets and its design and its mechanics. It's yeah, it's going to be an interesting storm here. I think that has potential to put Hex at like the forefront of yield bearing products. It's like, yo, this
Well,
has been working for 2 years.
capital's going to go to where it's traded best when they see whether it be 3 years, 4 years, however long, and it's at
Hmm.
perfect uptime and it's yielding the same amount of APY or close to it.
Yeah.
Where do you think money's going to go? You have the Hex Investment Trust coming out soon. It's like you have these
Yep.
things that are coming,
Yep.
and it's getting silly. Hold on, I see chatting with the captains on tonight.
Yeah, I
Let's
did
saw
just see that. So we're not even going to make it to the macros section of our markets and macros, but maybe we'll make sure to incorporate that next time. The one thing I wanted to touch on was I'll check this up here, was basically a follow up on this meal timing episode that we did. A lot
Yeah.
of that stuff gets conflated when people talk about like pre-workout or post-workout. So being in a pre-workout or a post-workout state, or even intra-workout, is something that I'll check in. Make sure to spend some time on. Kind of gets conflated around like meal frequency or meal timing, like the time of the day that you eat, as opposed to around a certain event. So that is like a more nuance or a concept that does require some nuance. But as you can imagine, I'll be probably deflating a lot of balloons. Not there's no special gains from
Our
getting
own
your
deflation in
yeah
the weight loss market, bro.
yeah. You're not going to get any special gains if you get your special protein in the 3 minutes post workout, like a lot of the protein companies say, basically. But there is some nuance to it, so I think it'll be a good thing to spend some time on. The captain, is here in the back room waiting for us to finish up. So I think we could probably call it there. That was a
Yeah.
really nice markets overview, I think.
Yeah. I had fun. It'd be
Make
really
sure we
interesting to see where things happen when
make
they
sure we
go.
spend some time on some macros. Maybe even dedicate an episode. I'd like to do a case study one of these days. I just don't know what to do it on yet. So we'll work something up there. And yeah, definitely get in.
Trending obesity rates because the CDC for some reason doesn't want to put out their
Yeah,
numbers. It's been 2 years though now.
you spent some time that one week. Maybe I'll spend a couple days really trying to find some shit on those guys.
Yeah,
Uh,
I haven't found Jack, bro. It's like they
and
totally
do
forgot
that as
about it
well.
because they did it yearly, and now it's just like, oh.
Yeah.
But cool, man. Yeah,
Yeah. Let's
great
call it
stuff.
there. Send you guys on your way to chatting with the captain. Should be scheduled here. I think this is with DC. Is this dollar
Nice.
cost? I think
Yeah,
maybe this is a different DC. Um, but if it is dollar cost crypto, he has been on our show before. He has been in the Hex community for a long time. Solid dude. Be sure to tune in for that.
awesome.
And we'll see you next time. Monday, as per usual, 6 o'clock Pacific Standard Time. Later, people.
Hey, dudes.